Good afternoon, traders. This is Tony D from easyMarkets in the Sydney dealing room. We had an interesting night overnight and a little bit of a subdued Asian session, but still to the point that some of these big moves that we were expecting for the euro, they did happen, but there was some volatility. So the market had a sharp rebound at the start of the European session, all the way back to 118. Before sellers in US came in, started selling the euro, but buying. It was more US dollar strength than anything else, buying the US dollar against the euro and against the dollar yen quite aggressively as US stocks rebounded here. You can see the most of the losses was regained from the last 3 days of selling in just one session. So you can see the difference between the buyers and the sellers is pretty magnified. It's such hard gains for the sellers, and then buyers come back in one day, change the trend back to buying on the dip. Really, the sentiment now is looking quite solid. Dollar yen still at the bottom end of its range though, and technically is still quite weak. If you're looking at how far it rallied, that's just a normal retracement in this new sort of downtrend. So it has to really get back towards that 113 level, back above 113 probably, just to alleviate some of this downside pressure. The trade that we did yesterday was the divergence between the euro and the pound. So the pound's got a good news story, the euro's got a negative news story. That played out quite well. It's fallen from 89 down to 88.50. Still has a lot of room to move here. Has sort of broken as well that upwards little support trend. So you can use this as a little bit of indication that the market has that the ability now, after failing at 90 cents multiple times, to go back towards that 87.50. And then below 87.50, if you go out on the daily or the weekly, you can see, probably have to go to the weekly here on this one. You can see that there's a lot of space below 87.50 all the way down towards 83, but more reasonable would be 85 as an initial target there. That can become quite, in the next couple of months, if there is a Brexit bill and a breakthrough on that Brexit bill, then a move down to 85 on the euro pound is nothing crazy in that sort of move. That pushes the pound itself probably around about back to those 136 highs that we saw, potentially also up towards the 140 level, which is still also not the craziest move in terms of how far the market did fall post-Brexit. And you can see that 140 would be a natural level to get to the pound to back up towards where it was just before the Brexit knockoff. If you looking at the Aussie dollar today, you've seen that there was the RBA minutes, a little bit subdued, still worried about the employment wage inflation, still worried about the Aussie dollar. And we are at new cycle lows here. 75.30, 75.20 was tested earlier. Now 75 though is a huge level in the Aussie dollar. If you've been trading it for the last few years, you have seen that the 75 level has been the level that has been the pivot inside the 73 to 77 range. So the market spent most of its life trading between 75 and 77 in 2015 and in 2016, and then finally this year we did have that break higher, but we have broken back into that previous 75 to 77 range. And so what we're looking at now is a test of 75. If you do break below that, opens up the door to 73.50, which was tested a few times in 2015 and 2016. So that could come into play as well. But 75 is a huge level, and if the market's going to change direction or find support anywhere, it's going to be towards that support. So keep an eye on that if you're an Aussie trader. In terms of big news for the Aussie dollar and the Aussie markets in general, for the first time in 16 years, the 2-year bond market spread between US and Australian bonds has turned negative. So that means US bonds are higher interest rates than Australian interest rates. That doesn't happen very often. Often does happen when currencies flip into big new sort of trends. So it is something to keep an eye on, and it could be something that the market uses as an excuse to push lower in coming weeks and days. And something which will become more pronounced the more that the US is raising rates next year, and the more that the RBA looks to be sitting on its hands, waiting for our inflation eventually to get there. If you have any questions about the outlook on any of these pairs or any of the things we covered today, please come through to the dealing room on the contact details below. If you're not a member, you can click and join up, and then you can get assigned a dealer like myself or Russell Sanford.